Welcome back to Lem's Cryptoverse. I've had a cold and had some technical issues, so I want to redo the Ethereum crazy speculation presentation I did. I'm going to make it short and sweet because there's a lot to talk about. So the story of today is that leverage and derivative speculation has been much higher than one would expect given all the bankruptcies and Voyager, Celsius, Terra Luna, Three Arrows Capital hedge fund. Leverage should be much lower and it's not. So I looked into that, looking at CryptoQuant and looking at Glassnode. If you look at those on-chain metrics, where you're seeing the leverage and speculation is not really Bitcoin, it's Ethereum. Ethereum has, I hate to say this word over and over, but it has just crazy high speculation. So we're going to go over it. First of all, let's go over the overall speculation. So I'm going to move over from you guys looking at me to looking at some websites. The first one's Altcoin Index. We're at 92. That's the highest in a year. So that's shown, if you're not familiar with this index, it's shown that altcoins are back in vogue, and that means that there's speculation overall in the crypto market. Now let's drill down into Ethereum, because this is the focus. Now, if you look at this chart here, the red line is showing options open interest in Bitcoin, and that's down from the highs. You could see here versus here, right? We had a high in February and a high in November 21. We're much lower in Bitcoin. But if you look at Ethereum open interest, we're basically at all-time highs. Now, one may ask, but what does that mean, open interest? It doesn't say if people are bullish or bearish. Well, here's what we do. We go to this next chart, and this is a drill down into exactly that. This is call open interest, co-option interest, and put option interest. But you can see here these teal, like greenish colors, bar charts, that's call option activity in Ethereum. So not only is there a lot of that teal colored charts, but the call option strikes for Ethereum are very high. You can see the current price is $1,700, but most of the strike prices where people are buying are very high strike prices. So that's a very bad indication. And secondly, if you look at the light purple, that's put option buying. And the put option buying is lacking. And the prices aren't that concentrated anywhere. There's a lot of call option activity at high strike prices, meaning everybody and their mother thinks that Ethereum's going to the moon. And there's a date here. You see this? I'm circling it. September 30th. And again, we're looking at date again, September 30th. And that date, in case you don't recall, is the date of the Ethereum merge. But here's the problem. This update, and I'm looking at this story here, this is a story of not again. They're talking about the difficulty bomb and how it's been delayed 5 times. It's one of the most anticipated delays, but it's delayed 5 times. How do we know it's not going to get delayed 6 times? So the difficulty bomb, if you don't know, it's related to the merge. And the merge, if you recall, there's a shift from proof of work consensus to the proof of stake consensus. In order for that proof of work to proof of stake consensus merge or transition to proof of stake to work successfully, they're instituting something called the difficulty bomb. Basically, it's making it unprofitable for miners to continue mining for Ethereum. So we don't want, right? We don't want those miners to mine for Ethereum because we're moving to proof of stake. So let's go back to the options and option smile for September 30th. So by September, let me just go back here. By September, we're supposed to have that merge. And if you look here, the implied volatility smile is increasing. And it's increasing because implied volatility is basically the price of the call options. You want that price to be about 100%, at least for crypto. That's a very high price. Like if you look at the S&P, that's only about 20. So that's a 20%, meaning that's the price implied by the volatility, by the VIX. And so if you look here, it's going higher and higher. We're creeping up all the way up to 180%. That's a very high price, meaning that investors are scrambling to buy call options because they think the price of Ethereum is going to rocket when the merge goes through. And here's another way of looking at it, but this is looking at futures. Now, if you look at the Bitcoin futures curve, the Bitcoin futures prices, like going out to next year, are showing that prices are going to be higher. Not a lot higher, but investors are showing that they're willing to pay higher price for Bitcoin in the future, into next year. But that's not the case for Ethereum. Investors are thinking that Ethereum prices are going to go down after August, especially going into January of next year. So why is this the case? Because they're really bullish about the merge occurring in September. That's why investors are scrambling to buy spot Ethereum. Spot Ethereum price is already up 50%. And the call options are showing that investors are looking for Ethereum to go up even higher in the next month or so. But the futures market is saying otherwise, but that after that, prices may go down. So I'm going to wrap this up because I promised it would be shorter and clearer than my last one. So again, what's going on here? The story is that overall derivatives leverage is somewhat high. There's no capitulation in crypto. But where the leverage is very high is in Ethereum options. And within Ethereum options, investors are buying call options. They're very bullish on the merge occurring exactly in September, which is next month. They're expecting Ethereum prices to continue to skyrocket. But I look at Ethereum options as a contrarian indicator. And so if Bitcoin prices decline even just a little, or they even stay flat, you're going to see Ethereum prices fall off a cliff. They're going to decline because remember, you got to read the put-to-call ratio, which is very low in Ethereum, and you got to read the options activity, the call options activity in Ethereum from a contrarian point of view. Now, if you read it that way, things are looking very bad, like Ethereum prices are going to decline in the next few months. Well, thank you all for listening to Lamb's Cryptoverse. And please don't forget to subscribe and hit the like button. Thank you. Bye-bye.